Having rental properties is the #1 way to build long-term wealth in real estate. But let me ask you something. How do you know when you have a good deal? More importantly, how much cash flow should a rental unit make you? Well, you're about to find out, my friends, so stay tuned. What's good, clever investors? It's your boy Cody Sperber back again, and I'm having a good day today. I'm feeling really good. Over the weekend, we threw our annual event where we raise money for underprivileged kids, and we had Reverend Run from Run DMC come out. It was a huge party. Over 1,900 people showed up. We raised $1.189 million. 100% of that money is staying in my local city of Chandler, Arizona, and all going to underprivileged kids. And I'm feeling pretty good about that. The Chandler Compadres, which is a men's group I'm part of, puts on these events. And we stepped our game up and we crushed this event. So feeling good. But today, I want to talk about making money specifically when it comes to rental properties and getting cash flow out of rental properties. All right, this is a very important topic that you really want to pay attention to. Now, real fast, before we get going, remember to hit that bell, turn on those post notifications so that way you get alerted every single time I post new videos just like this one. All right, and just remember, I'm going to hook you up with a free gift when you comment down below that you did that, just for showing your support. All right, now here's what I want to do. I want to walk you through a couple of metrics that I use to analyze my own rental property deals. Let's start with cash flow. Now, there are a few definitions and calculations that are needed to understand cash flow. All right, before I get into how much cash flow is enough, let's quickly define what cash flow is. Now, cash flow of a rental property is the gross rental income minus the total expenses. Expenses on a rental property could be insurance, it could be maintenance, it could be taxes, mortgage payments. Anything that you spend on a property to keep it rentable is a monthly expense. Now, a lot of people make the mistake of thinking that rental income equals cash flow. All right, rental income does not equal cash flow. All right, rental income is just the amount of money that you charge to your tenants. Now, cash flow is what you bring home after every expense has been paid. It's the amount left over. And it's very important to understand this distinction. Now that we know what cash flow is, let's take a look at a quick example of the calculation. Now, let's just assume that you bought a rental property in a very hot market, and you've got a tenant in this unit, and after researching the comps, you determine that you're going to charge this tenant $1,500 a month in rent. Now, your monthly expenses on this unit add up to roughly $1,100 a month. Once again, this includes mortgage payments, insurance, taxes, and maintenance. So let me ask you something. What is your monthly cash flow? If you said $400, then you're absolutely correct. The way you calculate it is your monthly gross rental income of $1,500 minus the $1,100 in expenses, which equals $400 a month. All right, now that we know how to calculate cash flow, let's revisit the original question. How much cash flow should your rental properties make you? Well, the answer is, it depends. Now, I know that's not the answer that you were looking for, but I promise you, you're going to get value from what I'm about to show you, so just pay attention. Now, the amount of cash flow that you generate from a rental property should not be looked at in terms of total cash. And what I mean by this is if you have a property that generates you $500 a month in cash flow, you're not going to be able to know if this is a good investment or not until you look at how much it costs you to get into the deal. Now, for example, let's just assume that you're getting $500 a month in cash flow, but it costs you $50,000 to get into the deal. And this $50,000 went to a down payment on the mortgage and went towards renovation to get the property rent ready. The $50,000 is your cash investment. Now, after you rent the property, you're bringing in $6,000 a year, which is $500 a month times 12 months. Now, let me ask you something. Is this a good deal? Is this enough cash flow? Well, in order to determine how much you should bring in on your rental property, you need to be able to calculate your annual return on investment. All right, that's the key term that I want you to write down. Annual return on investment. And this is the percentage of money that you're earning on your dollars every single year while you sleep. So in this example, the annual ROI, or return on investment, is going to be 12%. And how you calculate that is you take your annual income and you divide that by your total investment. So in this case, $6,000 a year is our annual income, and we divide that rent by the $50,000 that we invested, which equals 12%. Now, I've done plenty of deals myself, and I can tell you from firsthand experience that that's a pretty good annual return on investment, and you should be gunning for an annual ROI between 10 to 15%. All right? It's very difficult to find deals that are generating over 15% consistently on annual basis, but if you're getting between 10 and 15%, then I feel like you're doing really, really well. All right? That seems to be the sweet spot. Now, in comparison to other investment alternatives, rental properties, all right, by far are a better investment in my opinion, because you're going to get higher consistent returns than, the stock market or any other type of investing. This is why you see me so passionate about this. This is why I'm sitting here, week after week talking to you guys about building wealth in real estate. Successful investors like myself, we understand the enormous benefits to real estate investing and what it can do for you and your family. Now, one of the biggest advantages to real estate and investing is the lack of volatility in comparison to the stock market. All right, the average returns that you can expect in a stock market are between 8 to 12%, and at those rates, you're pretty much beating the market. All right. The problem with the stock market, in my opinion, is this level of volatility that you're going to constantly see. Some years you may get 20%, other years you might get 2% or 3%. Over the long run, if you average it all out, if you're getting 8 to 12%, you're killing it. All right. In real estate, however, you're going to see more consistent returns. All right, you got a property, it's making you 12% per year. As long as the real estate market's still in okay shape, you're going to pretty much be able to predict and expect 12% or higher year after year after year, as long as you have tenants in the rental property. All right, this is why more and more people are turning to real estate investing so they can get those consistent returns. All right, my friends, let's recap real fast. Consistent cash flow is the amount of money that your rental property brings in after all expenses have been paid. Total gross rental income minus total expenses. To know if this amount of cash flow is enough, you need to calculate your annual ROI. This is calculated by taking your annual cash flow and dividing it by your total cash investment. If your ROI is between 10 to 15%, then I believe that you're in a pretty good spot. All right, that's all I have for you guys in today's training video. Tell me down in the comment section down below what your thoughts are on this training and give your boy some feedback. Also, don't forget to smash that like button. And lastly, down in the pinned comment section, if you're sitting there right now and you're like, man, I love everything you were saying about building wealth in real estate, but I need money to be able to go buy rental properties. Well, I got something I want to hook you up with. When you click the link in the pinned comment section, it's going to show you by far the fastest way to make money as a real estate investor. All right, this is how I got started. It's a process called quick flipping. All right, when you click the link, there's going to be a free training video that's going to show you teach you about quick flipping, and it's also going to show you how to get your hands on 3 of my best-selling courses. All right, one of the courses is Quick Flips for Big Profits. Another course is my Influence and Negotiation training, and another is my Direct Mail Deal Maker training. All 3 courses are absolute bestsellers, and when you click the link down below, I'm going to show you how you can get your hands on them for free when you take me up on my 30-day deal challenge. This is how I created the money to be able to go and buy rental property. So I reinvested my quick flip profits to build my long-term wealth. So if that's an interest to you, click the link in the pinned comment and take me up on the deal challenge. For everybody else, thank you so much for hanging out with me. I hope you got some amazing value out of this one. And yeah, that's all I have for you. Till next time, I'm Cody Sperber, the Clever Investor, signing off for now. Till then, take care, comb your hair, Sperber out.